Before the merger, we were a 10 to 15 person firm that did tax only work. Now I'm part of a 150 person firm that has tax, audit, IT, and pretty much anything you can think of in the business world, we try and help our clients with, and we're able to offer those services.
Welcome back to Growth Under Pressure. I'm your host, Eric Josovitz, and today I'm joined by Brandon Verner, a CPA, partner of a CPA firm who's recently gone through a merger, a good friend I've known for a long time. Brandon, welcome to the podcast.
Hey, Eric, it's great to be here. Thanks for having me.
Awesome. Let's go ahead and jump back to the early days. What got you into accounting? Your dad was a CPA, started his own firm, and you jumped in and became a partner alongside him. What got you to that path?
It was not any pressure from him. It was definitely my own doing. Um, I think I took a bookkeeping or an accounting class in high school, and I was like, this kind of feels natural. What am I going to do? And I just went into college, still not knowing what I was going to do, and went in as an accounting major and just stayed the whole way. I figured once I took some other classes, I'd figure out what I wanted to do. But accounting was it. So I just found my way there.
Wow. Were you good at math, science? Was there something that got you to say, hey, you know what? This clicks better than social studies or
Well, it was certainly the problem solving aspect of things. And that's certainly what we do as CPAs most of the time. I mean, it's figuring out a problem. Every client situation is different.
awesome. And so you went to UGA, correct?
Yes, sir. Go dogs.
Go dogs. Did you have another degree that you were going after before? It was just I'm jumping straight into school and I'm going straight for accounting from the beginning.
No, I went in as an accounting major, and like I said, I was like, well, something else comes across. I knew I wanted to do business.
Yeah.
I just didn't know what exactly. My dad never pressured me. In fact, he was probably the opposite. It's like you don't want to be in this business. It's a lot
Hmm.
of long hours. It's a
Yeah.
lot of gray hairs.
And you see it now. Well, your dad I know is a hard worker. I actually worked, for context, I worked with you guys for a while,
Yeah.
about 4 years, in school and out of school. And I saw your dad's work ethic, your work ethic as well, but there's like that first in, first out that I always saw from him. So, just speaking of influence, is that what kind of got you into, you know, being an accountant? And like I'm trying to understand what got you to not just hear from him, but the influence. There was something that he did that showed you,
Well, I think, growing up and seeing his commitment to the profession and how much he enjoyed it and seemed to get from it and give back to it was very influential from that standpoint. So, I mean, he was definitely a huge factor. I mean, would I have ended up here if he was doing something else? I don't know, but I knew business was for me. Um, so accounting was just kind of a natural flow. And I knew going into college, if you had an accounting degree, you could pretty much do anything, and you'd come out of school, you get your CPA certificate, you could work for a firm for a couple of years. And if public accounting wasn't for you, there's a ton of options.
yeah, that's true. And that's what my mom told me. That's the reason why I chose accounting, because she said,
Yeah.
you'll always have a job. And business was that for me. It was like, okay, let me try accounting. And it ended up working out. I do feel like it is the foundation for business in many sense, but, kind of just talking about not just accounting, but business in particular,
Yeah.
the early days after school. You were at another firm before. You
I did. I worked for a large local firm when I first came out of school. I was there for about 4 years. And then I was kind of at that precipice of what do I want to do next? Do I want to stay in public accounting? I
Mhm.
had some clients of mine that I worked on that were trying to, recruit me to come work for them. I'm like, do I want to go into private industry?
Mhm.
Um, that was really the first time I ever had a conversation with my dad and his partner at the time. um, about joining their firm. We had never talked about it. It was never on the radar. He never pushed me to come there. Um, but when I was like, okay, I'm ready to make a change, and when I decided public accounting is where I wanted to be, it just made the most sense. And it worked out great. It was a hard decision, but it was one of the best decisions.
Yeah, and you've been at that firm
It's
ever since.
25 years now.
It's a long time.
Yeah.
That's amazing. So you
And
must know tax and accounting pretty well.
there's so much of it, and a lot of it becomes intuitive over time. But you still have to look up a lot of the tax law because it's a very thick book.
Yeah, I know it. So, and it changes all the time.
Yes, it does.
What did that progression look like in your career? Was it like junior, senior, tax manager, partner? How did you grow? Because I know your dad from day one wasn't just like, you're a partner because you're my
No,
son.
not at all. I definitely had to prove myself, and I'll say I was really glad that I had experience when I joined the firm because there definitely was this, oh, daddy's kid is coming to work for us.
Hmm.
He doesn't know anything. So thank goodness I had experience because I think that made a huge difference.
Yeah.
I probably would have fallen on my face if I had come out of school and gone to work for him directly, because
Yeah.
you would have just had to deal with all that pressure of people going, oh, it's his kid in here.
I feel like you
Um,
may have had a falling out with him. Just, I know he's got a strong personality.
Actually, we got along great. We never had any issues. We worked together so well,
Wow.
up until he retired. I mean, our minds were very similar.
That's amazing. I can tell you from my experience, that's not true on my side. I was an intern like 20 years old, and there were some days when he would be like, Eric, what happened? I'd make a mistake on a tax return, and uh, sometimes I'd make worse mistakes than others, but I learned from them. But he was definitely a stickler for
Yeah.
accuracy in being right.
Well, one thing I think he struggled with that I struggle with now is you have so much knowledge from all the years of experience that you expect everybody else to have the same knowledge. And you have to remind yourself that you were a 1 year, 2 year,
Mhm.
5 year person as well. And you were learning so much during that time. So, that I have to remind myself that.
That's true. And I always think of I'm relating back to the firm because I was there for 4 years early in my career, but one of the partners would bring me in and give me an assignment and say, "Hey, this is an easy assignment. It'll take you about 10 minutes to do." And every time I'd go back to my desk, I'm like, it would take him 10 minutes to do. It's going
Right.
to take me like 2 hours.
Right.
So you do have to, set that
Yeah.
expectation. Fast forward to today, you're at Symphona, you've gone through a merger. Talk to me a little bit about management and how you communicate effectively with, the people that work for you.
Well, I think, having the structure of what is a bigger firm now from what we were before the merger. Before the merger, we were a 10 to 15 person firm
Hmm.
that did tax only work. Now I'm part of a 150 person firm that has tax, audit, IT, and pretty much, anything you can think of in the business world, we try and help our clients with, and we're able to offer those services. And I forgot your question.
The management, yeah. So how do you manage effectively and how do you communicate without, yeah, just level setting, going
Well,
back? Yeah,
that's what I was getting to is one of the
yeah.
big differences is, when it was a smaller firm and we had two or three partners, you could walk down the hall and say, hey, what do you think about this as far as a firm decision, a firm management decision?
Hmm.
And you'd be able to just make a decision. Being bigger now, um, it's got a lot of benefits, but some stuff doesn't happen as quickly as that. You don't walk down the hall, you have to run it up the flagpole, and there's an executive committee that's got to talk about it and decide whether they're going to do it. Um, but I think it helps having the input of all those people. So you're making a more thoughtful decision.
Who reports up to you? Is it a manager? You're at the partner level.
I'm a tax partner in the firm, and so we have a whole tax department. So essentially, we're a team, but there are levels within the tax department.
Mhm.
So there are managers under me, and then under the managers, there's different levels of staff. But I work with all of them.
Yeah,
They're all in my office all the time, and as you probably remember from your day.
I do.
So,
I do. I mean, I was in a little cubby. Your office was right around the corner.
mhm.
Could go talk to you. And you guys are doing C corps, S corps, partnerships. What does the tax work look like for you?
It is a good blend of, there's a lot of 1040 work, there's a lot of individual tax work.
Hmm.
A lot of that spins off from the business tax work, in that you'll have an owner of an entity and that flows down to their personal return. So there's tax planning that flows from the business down to the personal. So there's a lot of personal, but there's a lot of business too. And it's a mix. I think the S corps are probably by far, most of the entities that we do.
Hmm.
There's just not as many C corps in today's world. The LLC S corp structure has
Interesting.
um, been utilized more, um, and you still have a lot of partnerships out there as well.
Wow, that's interesting. Because we do see a lot of C corps in the startup world. I think
Mhm.
that's very tech heavy. When you have a lot of shareholders,
Yeah.
it sounds like most of your clients would probably fall under that small business. Um,
Yeah, I mean, they range in size. I mean, I would say, our clients on average range from, $1 million in revenue to $50 million in revenue. So
yeah.
you've got everything in between. Um, but where I probably spend most of my time is on the small business and individual side. That's kind of
Hmm.
my area of expertise.
I see. And probably a lot less shareholders. Like you're not seeing 50 to 100
Not generally.
shareholders.
Generally, it's 1 to 5 owners, in most of the businesses that I work with.
And that's normal outside of
Yeah.
investments and private
Yeah.
equity and all
I mean,
that.
we certainly have investment partnerships where people get in deals and there can be, multiple partners, but that's a little different beast.
Sure. I want to talk a little bit about the individuals because a lot of people watching this are growing in their career.
Mhm.
Maybe they have businesses, but they want to diversify. From your experience, from seeing all the tax returns, rental income, capital gains, from call it the highest earners, what are you seeing their income split up by? What do their tax returns look like?
They vary quite a bit. I mean, you have some that they're pretty much all invested in their business and that's it. And you have others that, not in addition to their business, get involved in other kind of investments.
Hmm.
Um, Real estate, as you mentioned, is very popular. I think the main question I get is, how can I pay less tax? I mean,
Yeah.
that's what everybody wants to know. How can I pay less tax? And I think the key thing is not always to let tax wag the dog,
Yeah.
and make sure it makes sense for you. Um, for instance, I'll have somebody who maybe is moving homes and they're like, well, should I turn my existing home into a rental? So that could be great. That could be a really good tax strategy. There's a lot of benefits there.
Hmm.
Do you want to be a landlord?
Yeah.
That's the real question. Because if you're like, no, I don't want to deal with the repairs and the maintenance and the tenants, then throw tax out the window. It's not the way to go.
Because they're not really making money annually from it. It's more of a long game, right?
It is more of a long game, I think.
And the one thing I noticed going back to my early tax days with you is that and I don't know if this is true, so please keep me humble, but the vacation rentals always made more money than like the long-term rentals. I always felt like the
If
ones that did vacations.
if you have it in the right place, if you have it in the right place, then you can do really well in vacation rentals. But if you don't,
Hmm.
then the cash out can be very high because a lot of those vacation rentals have, HOA fees that they charge you every month, and other, the management company takes a chunk. So, yeah, if you've got a good one,
So you got to keep it
yeah,
occupied. It sounds like from what I'm hearing is that there's not a one size fits all, number one, but the high earners aren't completely diversified with like a W-2, some consulting work on the side with a couple business investments and vacation rentals. It sounds like a lot of them are just focused in one
I
area.
think it comes down to time and putting their energy to what they do best. And a lot of that is focus on their business. I think when they get, the business is established and
Hmm.
it's running on its own, then they have time to, I'll say, play
Yeah.
and do other things. Because, I'm not a financial advisor, but I know enough to know you need to diversify. You don't want to have all your eggs in one basket.
Yeah.
I mean, we've seen that over the years where, somebody's fully vested in their company stock and the company's gone, their job's gone, everything's gone. So, that's an important aspect.
Yeah. Um, yeah, that's really good to build on. I'm just thinking back on the early days. I one of the first clients that I did their tax return for had like $10 million of wages on their W-2.
We don't
So
see that very often, but we do see it.
yeah, and he was a public company CEO,
Hmm.
and yeah, he had some stocks and some other things, but it's just you can get a little bit of everything across the board.
You could have that same individual that has a $10 million W-2 and that's their whole return. Like
Hmm.
that's what they
Yeah,
do. And you can have that same individual that has that and then, 50 different investments that they do on the side as well.
yeah,
So it is a range. And I guess it does depend on the person.
amazing. Well, that's a lot to build on. Thanks for the background. On all of our podcasts, we ask about the growth under pressure moment. So I'd love to hear from you one story or one time where you were not sure about tomorrow or it was just a really dark day. Feel free to share and unpack what happened and how you got out of that situation.
Yeah, that's a really good question. I would say at the time we were going through our merger and it wasn't complete yet, my dad unfortunately got ill.
Mm.
He's okay, he's alive, but he can't work anymore. And it was one of those things where pretty much overnight, we're going through the middle of this merger, and all of a sudden, my partner isn't there and can't work. So that was a major thing. I was like so thankful that we had the merger. At the same time, I was then scared to death that they were going to back out of the merger
Yeah.
because we still had, ways to go to get it done. And I'll say, the people at Symfana were amazing. I mean, they were like anything we can do to help, and they stepped in, and that would have been that would have taken me over the edge, I think. If I had to deal with everything on my own without having that support system from them.
Yeah.
And, you know, I, the timing of it, I'm not a super like religious person, but somebody was looking out for me and us at that point in time to say, hey, this merger was something that was going to happen and the timing is going to be now. So that was a scary time. There's no doubt about it. I mean, he had been the, kind of managing partner and leader of the firm and, obviously had years of experience over me. So,
Wow.
yeah, that was scary.
Wow. That's amazing. And I'm a faithful person as well. I believe in God. And it is amazing how sometimes things work out. And you got to ask
Yeah.
yourself, you know, is there a God? And when those times happen, it's kind of an obvious one.
I mean, things happen for a reason. I do believe that.
Yeah.
I don't know what the reason is, but things happen for a reason, for good or for bad.
Yeah.
So
Well, there's karma too. There's also the fact that, you may have done some right and it was your
maybe,
turn.
maybe.
Well, someone was looking out for you and I love to hear that. I hate to hear, what Mike has gone through
Yeah.
and not being able to work because work was such a big part of his life.
It was big for him, and he was having some memory type issues that kind of kicked in, and he went from being able to do his job totally fine to almost overnight couldn't do his job anymore,
Wow.
and that was really just seeing that too was very difficult.
Yeah.
Seeing such the strong man, and all of a sudden he couldn't do um, what he loved to do.
What did that look like? Because I know Mike and he would get to the office some days at like 6 a.m.
He was early there. He was early in and early out, but he put his time in, whatever had to, be done to get the job done.
Yeah.
Um, and that made it hard too from a transition standpoint because a lot of his clients that hadn't been transitioned to other people in the firm, he all of a sudden was not there for that transition.
Hmm.
We expected him to be there, He was going to work another 5 years after the merger and work on transitioning his clients and work himself into retirement, but he got forced into it.
He couldn't.
No,
How did the
no.
clients get transitioned? What did that look like?
It was, me and some of my partners in the firm who had some relationships with these clients having to step up and reach out and say, Mike's not here anymore. We're here to help. We've worked on your account. We're familiar with you.
Hmm.
You may not have talked to some of us before, um, but it was tough, and we definitely lost clients because he wasn't there. There were definitely some attrition because of that.
It sounds like there's just some that you just can't win. And I'm thinking about acquisitions.
Yeah.
There are companies that do these bolt-on acquisitions where they buy a book of business and it's not promised. Like you could buy the book of business and lose it all the next
Oh,
day.
yeah, and I think retention is very difficult when you change the person that is your main point of contact. I mean, a lot of the reason I have the clients I have is because they, like working with me or they have a relationship with me, and if I'm not there, um, that makes it a lot easier for them to go, oh, my neighbor is a CPA, and
I
I've
have a
never thought
relationship.
about him, but now my relationship person is gone, so. Um, do I look at changing? And, I've gotten clients that way too. My CPA of 20 years retired. I don't have a relationship with anybody at that firm. And I've known you, Brandon, and I'd love for you to take over my stuff. So
Yeah.
it works in both directions.
Yeah.
But it's key to retention and having multiple contacts on a client within the firm so that if I'm not there, the client doesn't feel like there's not somebody else they can talk to.
Was that a learning experience for how you guys manage your current clients now?
I think it's an ongoing thing. It's very hard for us as the partners, as the main contact,
Hmm.
to remember to bring other people in
Yeah.
because you're problem solvers.
Right.
They call me, they have a question, I answer the question. So it's effort to say, I want to introduce you to so and so at the firm so that you've got another face.
Yeah, there's a lot of key man risk that's involved with
Yeah.
that, but you are the partner and that's your book of business. So to say, hey, I want to introduce you to another tax guy
Yeah.
just in case, it's kind of a red
Well,
flag.
it's more of a team effort. It's more of
Yeah.
a lot of times I think clients think that it's just me,
Hmm.
but I've really got a whole team behind me helping me do the work.
Hmm.
Otherwise, it'd be impossible. I'd
Yeah.
be in the weeds all day and wouldn't be able to service them the way they need to be serviced. So I think it's important for them to know there's a team and to know they can rely on another person in the firm if I'm on vacation,
Mm,
you know.
that's really good.
And we've got a really good structure at the firm for retiring partners to really work on that transition. It really is like a 5 year process. Um,
That's
you start letting clients know, hey, I'm retiring in 5 years,
Yeah.
and so and so is going to be your new point of contact, but I'm still here. And generally they get comfortable with that new person over that time.
Yeah, this just sounds like a very unexpected
This
event.
was an unexpected issue with my dad for sure.
Yeah,
So that was normally you would have, time to do transition and flow, but
yeah,
this one just kind of hit.
for sure. I hate to see that. Let's talk a little bit more about the merger. How did that affect you? I know it was a great thing. You have a lot of resources behind you. Did it affect your pride? Did it affect you in a good way, a bad way? What did that look like?
I was really excited about it because I knew there was a structure in place, that there were people to do some of the minutia that a small business owner has to do that would be taken off my plate,
Hmm.
having to worry about health insurance renewal, having to worry about a lease renewal. Those things I don't have to deal with anymore. And I was like, this is going to be great. I'm going to have all this new time to spend working on my clients and growing my business.
Yeah.
Now, what happened in actuality is you worked more on the firm.
Hmm.
And it's very rewarding work, though. So I don't have that free time I thought I was going to have. But I spend it doing things that make the firm better or figuring out the direction we're going to go. We're always looking to grow and we're looking to do acquisitions as well.
Hmm.
So that's a lot of the conversations is, we've been talking to this firm. Do they make sense? Do they fit with us? That's a lot more rewarding conversation than looking at your health insurance renewal and making decisions on deductibles.
Right.
So it's nice to be able to not have that piece to deal with anymore.
Well, that's great. It sounds like you're able to step out and be a lot more high level as well.
Yeah, for sure. I mean, obviously we have more resources in a bigger environment. So it does allow me, when we're well staffed,
Hmm.
to spend more time, developing business and just talking to clients and making sure they're comfortable and they're getting everything they need versus trying to just get the work done.
And not in tax season because you're not doing anything but taxes.
That's a different beast. You've been there.
I have. You've seen owners and your clients stressed about money, come to you confused, frustrated, whether it's IRS problems or just typical business growth,
Yeah.
obviously trying to pay less tax. How can you become the man in their corner and someone they can lean on? What do those conversations look like?
Well, a lot of your clients you become friends with, or they were friends before they were clients. So you develop a personal relationship with them. And I think empathy is the main thing is, listening and hearing what they have to say and being able to relate to it. Yeah, I've seen this before, or yeah, I've been through this before. And this is some of what I saw happen then that worked.
Hmm.
But I think the main thing is, just to step back and take a breath when those crises happen as best you can
Yeah.
and realize you can control only what you can control. And that if it's out of your control, there's only so much you can do.
Yeah. And just having a step-by-step plan to get out
Yeah,
of it.
exactly.
You gave me some really good advice with a client situation. I don't know if you remember this. I had a situation with a client, which ended up being perfectly fine. Everything worked out. But you were like, mistakes happen. They
Yeah,
happen. They still happen today. They're going to happen tomorrow. You just have to communicate with the client.
100%. And when I'm talking to a prospective client, I'll tell them that up front. I'm like, look, we are not perfect. We're going to make mistakes. I mean, we're dealing with numbers upon numbers. And it's really easy sometimes for, a 6 and a 3 to get turned around.
Yeah.
I mean, obviously, we've got technology and software today that helps with that more. But mistakes are still going to happen. And even if mistakes don't happen, you might still get a notice from the IRS just because it could be a mistake on their side. And so it is kind of telling the client, it's like, look, we got this under control, but we're dealing with a government entity
Hmm.
and it's not just a phone call to get it fixed. It's going to take 6 months.
Yeah. Especially if there's
Yeah.
a government shutdown or
Yeah.
the IRS is understaffed, which we've seen.
Yeah, for sure. And they keep cutting it.
It's crazy.
So
Are there just no more audits these days?
there are definitely audits, but what I have found is they're very pointed. They definitely are looking to see where they're going to find money.
I see.
So, if you are making, a couple hundred grand every year, and then all of a sudden an event happens, your business gets bought out, $10 million falls in your lap. It's amazing how they pick those.
Mm.
They find where there's money or where they think they're going to find money and try to use their resources there.
For those of you out there listening, you can still go for that $10 million buyout.
Oh yeah, look, I don't have a problem with the audit. I mean, it's not fun to go through, but if you have nothing to hide and you've done everything right, then it's really just a pain,
Yeah.
you
And you
know?
guys support your clients on those.
Oh, of course. Yeah. We represent them and don't let the clients talk to the IRS as best we can.
Yep.
Because the IRS is trained. I mean, they're trained to have a conversation and try and get around the professional so they can ask questions that they don't need to be asking necessarily.
It reminds me of this technique that I heard back in the day, and we'll cut this out if we need to. But you sometimes put an IRS auditor in a room that wasn't so super comfortable. Call,
You don't want them to stay long. Yeah. You don't give them the best setup.
yeah, but you can be nice, communicate. But you get them in maybe a rough, cold
Cold
room.
rooms, like maybe they want to hurry up and get finished.
Yeah, that's amazing. Well, the last real question I want to ask you is just you've been successful, grown a firm, been a manager that your peers rely on. I worked with you before, and I can vouch for your management style. It works. And now today going through a merger, still being a partner in a 150 plus firm. How did you get there from your childhood? Just going back to your childhood, maybe you could just think about one of the qualities that you have that made you who you are today.
No, that's a good question. I always had that drive in me. Like I always wanted to work. I always wanted to be able to make money. Like I was so excited to be able to make my own money. I mean, I started bagging groceries at the grocery store when I was 15, 14 years old. I think that was the youngest you could work. I was just so excited to have a job making $3.85 an hour, I think was the minimum wage at the time or something,
Wow.
something like that. So I always kind of had that drive to work. Um, and get to that next level. It wasn't always about the money. The money is nice. You want to get paid for what you're doing and you want to enjoy what you're doing. Um, but I always kind of crave for that, get to that next level. What do I have to do? I mean, I remember when I started off in the CPA world, once I graduated from college, what I want to know is what do I have to do to be partner? What do I need? What
Mm.
what characteristics do I need? What goals do I need to set for myself to get there?
So you always try to grow, and you're always trying to get to that next stage in life and climb the ladder.
Yeah, I think that keeps you going. I mean, if you just get complacent, then yeah, I don't know, things get boring, I guess.
Yeah. And they eventually can go downhill.
Yeah.
Um, but if you're still making the same amount you're making every year, you're not gonna, with today's inflation and the
No, you're
changes.
right about that. And look, being an owner in the business, if you never know how the year is going to be. Some years are better than other years. The person who gets the pay cut if there's not money to go around is the owners.
Yeah.
So that's always a risk reward of being an owner in a business. I mean, we've had some lean years. There's no doubt about it. And you have flat years, and they're not really flat, like you say, because there's inflation. So it's really, even if you're flat, you're going backward.
Yeah, it's a
So
lost
it's a
year.
constant, yeah, I'll get asked a lot of times, hey, Brandon, are you still taking on clients? I'm like, yeah, of course I'm taking on clients.
Please.
If there's ever a day where I'm saying, no, I'm not taking on new clients, then like you're just looking for the firm to die
Yeah.
at some point in time. You can't get complacent in your book of business.
Right, because I mean, there is attrition, there's other external factors
Sure,
that, you think of growth, you're like, oh, I'm going to grow 20%, but you always have to think of what are the other changes, whether it's environmental changes or, you lose one client that could be a 1% churn.
sure. Sure. And, a lot of times we lose clients. I think most of the time it's not through the fault of our own. It's not that we did something wrong. It's that a client got bought out and that
Hmm.
business is now gone and part of a bigger business.
Yeah.
That's probably what we see most with our business clients. Somebody moves or their business changes, they retire and the business just goes away.
Yep.
So a lot of just life circumstances, um, you know, kind of make that happen.
Awesome. Let's close out with a quick rapid fire, 3 questions.
Okay.
Give me one metric or it could be one tax advice that you give to your clients every week without fail.
Oh, wow. I think when I'm talking to tax clients, the main thing I want is for them not to leave any deductions behind. If we don't know about it, then we can't take it.
Mm,
So I'd rather them give me too much information than not enough information. So I'll have clients sometimes on the individual side, they just assume that the standard deduction is going to be better for them. Well, we don't know that unless we take all the pieces that make up the itemized deductions to be able to compare.
yeah.
And then it's a question of, well, I don't feel like gathering all my charitable contributions and all that information. And you say, okay, well, that's fine. We can use the standard deduction, but I hate for you to give them, you know,
Yeah.
a dollar more than you have to. And for business clients, it's a similar thing. Make sure you're capturing all your expenses. If you don't tell us about it, it's not going to get on the tax return. You're not going to get credit for it.
Yeah.
So even if you're not sure if it's allowed, if it's deductible, Give us the information and let us use our expertise to say, okay, well, this is not a deductible expense, but all this other stuff is. Because if you don't tell us, we don't know.
It's not going on there.
Yeah.
That's really good. All right, one book, podcast, or talk that you would recommend to owners under financial pressure or just, small business owners.
A podcast that I really like is the Money Guy podcast. I forgot to mention that to you.
Okay.
And you should check it out. It's a couple of financial advisors who I know very well over the years, and they're really good. They're one of them is a recovering CPA, as we like to say, so he's got tax knowledge, and they do a great job.
Awesome. All right, complete the sentence for me. A founder under pressure should always.
Crawl under their desk and hide. Now,
Okay.
again, I think you step back and have to take a breath and, not let your emotions take over. That, just breathe. And again, everything happens for a reason.
So a founder under pressure should always take a breath.
Take a breath.
Amazing. Brandon, this was really good. Always enjoy talking to
Hey,
you.
man,
Thanks so
thanks
much
for
for
having
joining.
me, man. I appreciate it. This was a lot of fun.
Great. Till next time. That's it for today's episode of Growth Under Pressure. I'm Eric Josovitz from Adapt CFO, and I hope these insights help you tackle your biggest scaling challenges. If you want to help other founders find the show, give us a quick follow or a share. Thanks for listening, and I hope to catch you next time.